tariffs deglobalize, right? So you have to reestablish the production chains, which means you need to have the offtake, you need to have the supply, right? You're going to have more smelting capacity then you have production coming from mines, and then a fight over who can get the supply. That is why United States wants to build its own capacity, because it is to compensate for the power that's been handed over to China. And that bodes extremely well for commodities and the underlying owners of the deposits.
Ian Harris, CEO of copper giant, that's CGNT, on the TSXV, returns to the show. Huge moves in the commodities and base metals space. Let's just jump right into it. Ian, welcome back to the show.
Thanks, David. Always a pleasure to be here.
This is a scary chart. Copper went up 13% the day that Trump announced 50% tariffs on copper. Just today, we're speaking, the premium between the LME and COMEX blew out, which is what contributed to this huge drop. 20% in one day. I've never seen anything like it. That's a scary looking chart. I'll just let you explain what happened.
So I've been saying it for weeks that I'm really happy that on the iPhone app, that when you put in copper price, you're looking at the futures price on the COMEX, because there was this arbitrage building between LME pricing and COMEX pricing, or any other place pricing, because there was an anticipation of an upcoming tariff. So the price on the COMEX was inflated, anticipating or hedging that these tariffs would come in place. So when Trump came out, I think 2 days early, because I think it was supposed to be hitting August 1st, and he came out and said, you know what? No tariff on refined copper. And so therefore that whole arbitrage, because that's what these exchanges represent, is the price of the refined copper, that arbitrage disappears. And so there's a correction back to price closer to what the LME is seeing. So it obviously psychologically, I mean, even your reaction was, oh my goodness gracious, right? But the impact is a different story, especially on the copper equities. I think that I had a couple conversations. Today would have been a very good day to buy copper equities, because this impact doesn't directly always relate to what is the impact on the underlying equity companies.
Wait a minute. So now we're back to the point where there probably will be no tariffs on refined copper. So what really is the fair value of copper? Was it $5.90 premium wipeout, or is it $4.46, which is pre 50% tariffs on copper?
So let's be clear. This was definitely the price people were paying in the United States to buy copper off of the COMEX. So there were companies that were selling on the COMEX and making a fortune based on this arbitrage, even though it was based on an anticipated tariff, right, that didn't come into place. So I would argue that this is closer to the reasonable of what the world market is currently pricing copper without a tariff, right? So it's back to balancing where you see the COMEX and the LME price being very similar.
What do you mean it has a huge impact on LME? Yeah, well, okay, sure.
Go ahead.
What do you mean it has a huge impact on the copper equities? Because I'll pull up the LME in just a minute, but like your stock didn't really move much
in most cases.
Yeah.
Yeah, we did. There was a lot of correction because we've just pulled off financing, but in the day, like we went from 20 cents, we were doing well, and went down all the way to 16 cents. So I mean, it hit us hard. Definitely hit us hard for at least a day, and then corrected back kind of at the end of the day today. Right, it's a little bit of a knee-jerk reaction, but again. So let's talk about Copper Giant. Copper Giant has a big project, and one day it's going to be producing, but Copper Giant, or the Mocoa project, would probably not be producing refined copper. It would be producing copper concentrate, right? So smelters and refineries produce refined copper. So when Trump came out and said, I'm going to put a 50% tariff on refined copper, and it means that I want to build refining capacity in the United States. because smelters make refined copper, not copper mines. So therefore, I think what happened is that somebody went, okay, we're going to build some smelters, but it's going to take time. Give us some time. Because if you put a tariff on refined copper, guess what happens? Because what do you use refined copper for? You use it to make electric motors. So if you have an electric motor company and all of a sudden your refined copper is more expensive and there's no smelting capacity, you're going to go, okay, I'm just going to take it to Mexico and we're going to build my electric motors in Mexico and import my electric motors to the United States. And that's obviously counterintuitive of the purpose of doing the tariff. But I think it was absolutely a signal that says, I want more smelting capacity in the United States, and I'm going to give you time to do it. Right? Because then the next move was he did put a tariff on the secondary or second use products, the wires, the cables, the et cetera, et cetera. Right. So we want to see more manufacturing in the United States. It's a clear message to me. But that doesn't affect the copper mine that is producing a copper concentrate.
Correct me if I'm wrong, but I believe most of the smelting of copper concentrate is done in China currently. Right, so you have to, if Mocoa starts producing, you'll have to ship the concentrates to China. They do the refining, and assuming there's a tariff on refined copper by that point, that means there's going to be higher prices of refined copper coming out of China. Right, the back and forth will just increase the prices dramatically through the supply chain.
I think that you look at it this way. You are correct in a little bit, right? So my point. If China today controls 60% of the copper smelting capacity in the world, it's 60%. The others are North Korea, Japan, Germany, Poland, and the United States. But the United States, actually, it's one of the biggest producers, but it's even a bigger consumer. So it doesn't have the same level of smelting capacity inside the country. So let's look at Mocoa and just pretend we have a perfectly balanced system where it's a globalized system where, okay, I don't care. I send my copper concentrate to China. China produces the copper, and then they ship it to the United States, and they make the wire, and they make the electric motor that then goes into the Tesla. If you all of a sudden have a tariff, then you have a rebalancing. You have tariffs deglobalize, right? So you have to reestablish the production chains, which means you need to have the offtake. You need to have the supply. Right, you're going to have more smelting capacity than you have production coming from mines, and then a fight over who can get the supply. And so that is one of the reasons why just the conversations about the reestablishment of production chains, moving more manufacturing in the United States, the hint of the desire to build more smelting capacity is extremely bullish for mining exploration and mining developer equities, because the underlying assets become extremely valuable in a deglobalized system.
So it'll take years to build smelting capacity in the US and Canada. So in the meantime, are we looking at a true shortage of copper then?
You know, this is always, we get back to, it's Dr. Copper. So a lot has to do with the strength of the world economy. But it does seem, the big fear in the planet used to be, is it going to be a soft landing, hard landing? Even me and you had that conversation. And now it's, is this a recovery or is this a boom? Right. The United States economy looks like it could be absolutely on fire and, intentionally have a huge impact on overall world economic growth. And so that would be interesting how that all of that plays out, right? I like that the Mocoa project of Copper Giant is, and we can probably go into more details, is in Colombia, which is a non-NATO ally of the United States. It's at the same level as Australia or Japan, right? So if you're going to be reestablishing a supply chain, this is a number one location that I think the United States would be going to help fill its supply. So today it is very interesting because imagine we're in a globalized, economy. China is controlling 60% of all copper smelting. China put a tariff on refined copper, which is probably where the idea came from. And what happened is they built up their refining capacity because they don't want to import it. It incentivized building more smelting capacity in the country. But now they have too much capacity in smelting, you could argue, and to the point where I have a mine, and so I go to a smelter, and it's like a service. The way the contracts are, it is I pay you to smelt my concentrate, and there is a charge for it. It's called a treatment charge. And then they pay, okay, I'm going to pay you 99% of your copper minus the treatment charge, and that's how much money you get paid for, right? That's what you get paid for in that metal. And those are negotiated, et cetera. Those numbers last year and recently have been negative. So the smelters were paying to have the luxury of smelting the concentrates from mines, right? And even I think some of the first long-term contracts of the year were zero treatment charge. You basically paid nothing to treat it because there was a fight over the supply. Now, that's in the individual between mine and smelter. Now, that's when things are working and you're globalized. Now, if all of a sudden you say Europe needs their own capacity, the United States needs their own capacity, and everybody's fighting over that capacity because, China is actually using that strength that it has now politically to kind of say, oh, you're going to be mean, no more rare earth metals for you. We're going to have no more copper. They're using that position from a position of strength. I call it the assassin's mace. So that is why United States wants to build its own capacity, because it is to compensate to the power that's been handed over to China. And that bodes extremely well for commodities and the underlying owners of the deposits, because they are what is coveted. They are what everybody needs to establish their own production chain. So I think that we're coming into an extremely bullish cycle for commodity-based equities.
This raises my next question, which is whether or not other critical metals and rare earth metals are reacting to the same macro story. Platinum, for example, I told you this offline, up 57% to the peak, up 40% to today's price after the pullback. Let's just take platinum as an example. Is this following its own narrative, or does this fit into your broader thesis of the supply chain getting choked?
I think that platinum is more like a canary in the room, right? We use platinum for catalytic converters. It has industrial use. It is also a quasi precious metal. So it has that feel to it. But this is what happens when you have a perfect system that really tries to balance supply and demand in a globalized system. All of a sudden, you have a little bit of a chink. And now all of a sudden there's physical delivery concerns. Now, platinum market is way smaller than gold or copper on any sense, but it indicates what happens when these things get out of sync. So when you run in a globalized market, you run on the edge. There's no extreme amount of overcapacity. When you talk about copper and you say, ooh, we're really over capacity this year. There was supply outstripped demand 1%, 0.5%. A huge year with 2%. So there's not a lot of margin anyway. So when you start decoupling and making the system less efficient, it makes the underlying commodities only more valuable because people get desperate. Because you can't build your catalytic converter without platinum. You can't build your electric vehicle without copper. You can't build houses without copper. And so it becomes a part of a company's, it becomes life and death. And I think the best example of that is AI, right? I think we've talked about this before, how AI is a race between nations and companies. And for them, it's life and death. Whoever has the best computer at the end of the day is going to win. Who has the smartest computer, better said, is going to win. So nothing can stand in the way. Otherwise, you're dead. So it's not like electric vehicles where you could slow it down or speed it up. That transition from, gasoline internal combustible engines to an electric motor, which moves you more into copper demand. We're going to take a little bit longer to save the planet. But in AI, it is pedal to the metal. And so they will not let anything get in the way of their growth. And that's the examples are buying nuclear power plants. And I think the next is going to be commodities. You're going to see integration of technology energy, and commodities.
Here's the thing. If I were the leader of a semiconductor company, a chip maker, or even just a data center, any industry, construction company, any industry that uses a lot of rare earths and copper, I would be pulling my friends together. I'd write an open letter to the government. In fact, I lobby the government to decrease permitting times or do whatever they need to do to make it easier and more efficient to produce copper in North America and South America, where your company's based. We'll talk about that in just a minute, and in Europe as well, to be less reliant on China, right? So I as an industry leader, don't want these higher prices that you're talking about. That's kind of the tail risk, so to speak. I mean, can you see that playing out? I mean, that seems logical, but I'll let you evaluate.
I think it's happening. And so, it's happening. But it's not happening as if we thought of a logical solution, that would be the logical solution. Go to lawmakers. But guess what? Politics get in the way. You know what really works really well? Tariffs. It's amazing, right? Because all of a sudden everybody worries about it. So say you own your chip maker, but probably I like electric vehicle or your data center construction company, right? And you go, if I don't have copper, I'm not building this, right? So I need it now. Like, let's get this. Let's get this moving. Now, all of a sudden, never had to worry about it before. In a globalized market, you're like, well, I'll get it somewhere. Okay, maybe it'll cost me a little bit more, but it was never a question of not being able to get it, right? Where China is going to go one day, or they could have gone one day if this didn't all start breaking down. They could have gotten to the point where I'm not selling you copper. What do you want it for? Well, I want it for my electric vehicle. Goes, I'll sell you the electric vehicle. They were getting to that point where because they had such a strong demand, things were becoming a scarcity. There was an expectation of a lack of supply where they could have just sold the high value products. And so now it's becoming a issue of survival for some companies, their understanding of their own production chains, where they did 5 years ago, they didn't have to worry about. 3 years ago, they didn't have to worry about it. Today, it's in the conversations in the boardrooms of companies that depend on commodities. I know that they're having this conversation. But the other interesting part of it, it's becoming the conversation of nations. The second we are in this beautiful world and everything is working great, and Mexico has built up all this supply capacity to provide products to the United States, and now there's a new tariff, they go, whoa, 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 what's going on? And they go back to mining. They go back to their commodities. We are a mining nation. We can do this. And they start incentivizing going back to the things that are underneath their control, which is they do have the commodities. So I think it's going to start happening naturally. I think that tariffs are incentivizing and accelerating that because it's creating the conversations and the concern, right? It creates fear and greed.
So let's say these duties last a full year. For the sake of argument, what's the first operational move you make in Mocoa? You called tariffs a knee-jerk or knee-jerk chaos. And so how would you respond to this chaos?
So, well, we understand the underlying value of the project we have. There are very, 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 very few. I call it the unicorns in a suit of projects that are of scale and can come into production quickly, near to a significant amount of infrastructure. And Mocoa is one of those projects. And that's why Frank Juster is involved. That's why we're in the Fiore group. We understood it. And we're with a group of people that have experience building large scale projects, national building projects. And so the big one is understanding and navigating a project of this size and scale. We understand we are extremely undervalued, where now it's become a part of a catch-22, which is there must be something wrong. That's why you're undervalued, and we're undervalued because we're undervalued, right? It was where things started. And we haven't hit that momentum. Things like today that are happening create fear, and people don't understand, but we still understand the underlying value. This is a project that has 600 million tons of resource. We put out an exploration target demonstrating how it could get to close to 2 billion. Could contain up to 10 million tons of copper equivalent. That is a huge project. The entire world produces 20 million tons of copper today, around 22 million. So that puts it in perspective, the size and scale potential that Mocoa has. And we're in a country that is a major non-NATO ally of the United States. It's right below NATO. It's the same as Japan. It's the same as Australia. We are very close to the United States. So my goal with what we are doing, we just raised a considerable amount of money that allows us to get to our major catalysts. We're currently drilling. We have 2 drills running to increase that, demonstrate that with that exploration target and convert it into resource. At the same time, update the resource and start working on those preliminary economic assessments. Colombia has elections will be coming up for president in May. Petro cannot run again. You can only run 1 term in Colombia. There's an expectation that there will be a big boom coming up in Colombia. It's the reason why you see Freeport-McMoRan and Rio Tinto and a lot of other companies coming into the country and kind of getting their feet in, because it's seen as one of the upcoming places. So it's about navigating a big ship and thinking a year or 2 ahead of time of how this becomes. I have no interest in just exploring and creating a resource. I am interested in being able to build a mine and pick that timing. I do believe that there will become eventually, with under Trump, a tariff on refined copper. I think he just wants to incentivize the construction of refining capacity in the United States, and it will need offtake.
So last time I spoke with you, I believe you said that you were targeting a 2026 PEA, preliminary economic assessment. Is that still the timeline given the renewed copper tariff chaos, if you want to call it that, since our last conversation? Yeah? You haven't changed your
luckily, we now have the money. We now have the money in the bank in order to do it. So we can do the drilling. We can do the updated resource. We can do that. And it's timed less to the overall chaos of tariffs, and more tied to the timing of politics in Colombia. I want to make sure that we have something tangible that we could demonstrate to an upcoming and new president, that when he says, I want to create jobs, I want to create investment, we have a tangible project to be able to demonstrate them and say, this could be a part of your plan, Mr. President. And that's what worked in Ecuador. That's what worked in Panama, being a solution when the time comes. And so that's why it's so important to have something tangible in hand.
On the new president, which policy lever, if any, would be most instrumental in helping to actually build Mocoa? Would it be infrastructure, royalties, permitting, all of the above, none of the above?
There's something that I've learned, and that is perception is what is most important. That a lot of times there's only been 6 big copper mines built in the last 10 years. 2 were in Peru, 1 was Ecuador, 1 was Panama, and 2 were in Africa. And so what was not on that list? The perfect jurisdictions. Chile wasn't on the list. Argentina wasn't on that list. United States wasn't on the list. Canada wasn't on that list that I just called to you. So for some reason, jurisdiction gets a lot of feel, but a lot of it is to do with perception. I don't think that we need any significant policy changes in Colombia in order to build a significant mine. What we need is a better perception of Colombia. But I think that's going to happen by itself. People will be waking up and realizing how great of a jurisdiction this is. We've had a leftist president now in for 3 years. He's got a year left. Elections coming up. And really, he has been very supportive of strategic metals, maybe not so supportive of private companies. But in the same time period, you see permits coming out, you see Eris advancing, you see collective mining advancing, you see Buritica with Zijing doing an incredible job, you see Cordoba Metals advancing towards building one of the first larger scale copper mines in the country. So the reality is different, and so I think the biggest change will be a change in perception.
So you wouldn't push for any policy changes?
I don't think it's necessary. No, I think that cooperation is what is most necessary. And we're already working. I like putting destiny in my own hands. What worked in Ecuador, what worked in Panama, I call it the triangle. I call it strength locally, which builds a positive perception nationally, which drives political will. So it's way beyond just people liking you locally. You have to make them part and feel part and ownership in the project, feel really, really, really strong. And that's what drives the political will over time. And when there's a will, there's a way. And it was way worse in Ecuador. We had a brand new mining law, brand new constitution. How the heck do you figure out to give the government 51% of the benefits? But when there was a will, there was a way, and that project got built. It was the first industrial scale mine in the history of Ecuador. Mirador, followed by Fruta del Norte. There were 2 mines built in that window of time in Ecuador because there was a will, right? So I wouldn't be lobbying for specific changes. What I will try to do is generate that will, because where there's a will, there's a way.
Right. A quick update on drilling. This came in from your company recently. Extending your drill results 567 meters at 0.54% copper and 0.07% molybdenum. Walk us through some of the highlights here.
So this is one of the best drill holes in copper in the world. I just want to make sure that if, for those who don't understand the numbers exactly, this is one of the better holes in the world, right? It is a significant intersection. It's over a kilometer length of mineralization from surface. It has over 500 meters at 0.5% copper, and that's just copper and a 0.7% equivalent. And it demonstrates why we are so confident in the quality of the asset that we have at Copper Giant, and that the world will figure it out sooner or later. Right? It's probably the second best drill hole that we've drilled on Mocoa from in terms of total copper content per meter over the copper meter analysis. So it is an amazing drill hole. And what I like to point out is that is mineralization that is starting from the surface, where you see similar, maybe even a little better intersections and other projects, but they're 800 meters underground, which means there's a great example. If you I look at the top 10 copper projects in the world, the biggest undeveloped copper projects in the world. If over the next 10 years to meet supply, we need to build every single one of them. We need to build one a year. We know it's not going to happen. A great example, I think number 2 or 3 on that list is Resolution, which is a project that's, I think, over 20 or 30 years being permitted. And if they started today, because it's so deep underground, you would not start production for at least 7 years. So having a project that is near surface means a massive difference in the amount of capital required. We have 220 kVA power lines that run by the project. We are connected to the national road system. We do not need significant infrastructure for this project, which is amazing. And nobody lives in the area of the deposit, so we don't have to move people, but people could be going to work and going home at the end of the day. It is ideally located. If it was a planet, it would be one of those in that green band where people say life could exist. It's that kind of location for a project. So we are very bullish of what this project will be worth. As a comparison, Corriente over 10 years ago, the Mirador project sold for $690 million. And it's a project of similar size and scale to what Mocoa is today. And I think Mocoa will grow to be even bigger. So we know the value of the project we have in an environment that we're in. So I believe there's a lot of what does this all mean going on because of tariffs and seeing big moves. But what I'm most excited about is it's at least people are paying attention. People are actually looking. People are going, what does this mean? And so there'll be a lot more people will be able to understand what is the real need of copper and how valuable assets like this will be very soon.
Okay. Next milestones for Copper Giant then after this result.
The bigger one is just to continue to drill, to be seeing news results out about on a weekly basis, on about a monthly basis, 1 or 2 drill hole results. By the end of the year, we want to be doing that updated resource. There's also things such as metallurgy that will be coming out. Those are the big near term from now to the end of the year to be the basis of that updated resource, and then moving in, as you said, to a PEA in 2026. So really just continuing to demonstrate there's momentum on this project, keep it moving forward. And my biggest number one goal is we're trading for about a 0.1 cents per pound in the ground, and other projects that are moving forward, although before us, right, it's hard to graduate, are trading at least for a penny per pound in the ground. So it's to build that momentum to get the revaluation that the project already deserves. And I really think it's already checked all the major catalysts. It just needs a little bit of wind in its sails to get the momentum. We're in a momentum market to get to the valuation that the project deserves.
Biggest differences between working in South America, where you're based, versus working in North America, where you've worked before and are currently involved with in other projects?
You know, there is a lot of differences, but some of the biggest ones that you have to break your mentality is that the cost of professionals is dramatically different between the two countries. So there's using locals. That's why I live in Colombia. That's why I'm fluent in Spanish. It allows you to work with some extremely professional people that are in a completely different pay grade. That you know, the professionals in, you know, a miner, for example, in United States can be earning $300,000 a year. So that just puts it into perspective. That's one of the big things. So there's But at the same time, there's a little bit more inefficiency in the system, right? But overall, I don't think it's different. We might act like it's different, right? There's not much difference when it comes to building a mine, and the building a mine requires political will, and political will requires national approval, and national approval comes from strength locally. It's the same formula as projects I've worked in Canada with First Nations, for example, building their collaboration into the project, building strength. Strength is one of the first ways you get a permit. If you don't have that, you could be waiting for 20 years to get your permit, and it might never, ever happen. So I think the overall formula is the same. It just might be the structure of work on a day-to-day basis can be slightly different.
Okay, excellent. Thank you very much, Ian. We'll put the links down below, so make sure to check that out. And follow Copper Giant. We'll speak next time. Plenty of more news with tariffs to come.
Thanks, David.
Thank you for watching. Don't forget to like and subscribe.